Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. In the last 2-3 months, the stocks have not been doing well. Just last week I think was okay, but this week it's been down quite a bit. So there's so many companies that are on sale. Just this week, when you look at the general stock market, the S&P 500, what you will notice is when it comes to tech and consumer communication services, consumer cyclicals, and they're not doing really well, including financials as well. But the companies that are doing, or the sectors that are doing really well, include the healthcare, consumer defensive. You're looking at the real estate, you're looking at energies, utilities. They're doing really well. The industrials are not doing great either. And the company that we're going to look at today is UPS. Okay, so the company we're looking at, not UNP, that's Union Pacific. UPS is the company that we're looking at today. It's down about 10%. Okay, just about this week. And so when we look at the company, this is a company that has been in my watch list for a long time. But just the last 5 days, they're down about 7%. Okay, for this month, they're down about 6.5%. For the last 6 months, they're up about 3%. But a year to date, they're down about 11%. So since the beginning of the year, they're down quite a bit. And when you look at from the high to the bottom here, you can see about 17% down from where it was the height. And what basically, when you look at the 52-week high, it was $233 per share. And the lows was $171 per share. So you can see it came down quite a bit from $233 to right now $190. This week especially is down quite about 7%. And I was looking at it thinking, what is going on here? Has they released their earnings? Has something happened to the company? And I went on to look at their earnings on Seeking Alpha, but they don't actually release their earnings until the 26th of this month. So then I thought, okay, there must be something else out there to actually indicate, basically tell us what's going on. And when I looked at the Wall Street Journal, and the only thing I could find is this situation where Alphabet or Google, for example, is launching this drone delivery in Texas. And that was it. That was the only thing that was linked to anything to do with deliveries. But drones delivering stuff, that's fine. But I don't think that's going to take basically market share away from UPS, a company that's been around for a long time, is very well established. Okay, so what we want to do now is just look at the financials and see if there's anything we need to worry about, or if we think this stock is actually will be a good addition to our portfolio. So when we just look at, before we actually start looking at the financials, just to let you know, last time I did a video on comparing FedEx and UPS. FedEx wasn't actually Sharia compliant, so I apologize for that. I didn't actually check at the time. They have a high debt, but UPS is definitely Sharia compliant. They actually don't sell anything that's not compliant, but their debt levels is actually quite low as well. You can check that out on places like Zoya and so on. Now, when you look at the annual revenue, okay, from 2017 to right now, okay, to in 2021, December 2021, when they released their full earnings year, fiscal year, for example. Okay, you can see from the growth from $66.6 billion to 97. Right, this 97, you're just going to have to be really careful with it, okay? Because the year before was about 84, okay? But just let's say 85, and then it grew basically up to $97.3 billion. A lot of it is because we were locked away between 2020 to 2021, everyone was at home, everyone was basically getting delivered from Amazon and so on. No shops were open, and for that reason, wherever you were in the world, basically you were using UPS, you were getting deliveries and so on. So you're gonna have to accept the earnings might come down, or the revenue might come down quite a bit, maybe in the next couple of months, okay, in a couple of years. So again, the annual, basically the expectation is, so the estimate is about $101 billion, which is actually surprises me for 2022. That's what they expect. 2023 is basically expected to grow. Now, if they don't hit this and it goes down a little bit, okay, that doesn't mean the business is completely ruined. Because there's an explanation for the fact that it had a massive jump from 2020 to 2021. When we look at the earnings per share, you can also see it's actually gone quite a bit just in 2021. So you have to be careful when you look at this type of business. You have to think holistically, okay, basically the whole company rather than just focusing on just what is happening right now. So that's one of the things that basically you need to look at. So let's have a look at the financials in more detail now, okay? So obviously UPS is one of the largest parcel delivery companies in the world. 80% of their business actually comes from the US. I think it's about 80% of these in the US, although it says about 62% here, and then 20% is from the rest of the world, if you like, okay? And then it's in the industrial sector, currently trading $190 per share. PE is about 13. Now, I've not seen this company trade this much. It's been on my short list for a long time, or basically watch list for a long time, but it hasn't actually never hit this low. Price to free cash flow is only about 14.5. EPS about 14.68. And then you've got market cap of 109. Wait, I'm not sure if that market cap is actually correct. Let me just double check. Let's go to Yahoo Finance and we'll just quickly double check that is the case. Actually, it is $166 billion. That's really good. So $165 billion. I thought it would be lower than that. Economic mode is wide. So according to Yahoo, according to Morningstar, it has a competitive advantage over their competitors. And this is one of the reasons that I'm not worried about. If I was to buy this, I'm not going to worry about Google coming up with some drone thing. Okay. So annual dividend yield of 3.23. One of the reasons is their annual dividend yield wasn't actually that high, but they hiked it so much recently. Let me actually quickly show you if I can find this. Okay. This is really surprised me, and this is in their earnings report. Okay, quarterly dividend by 49%. That's the big stuff I've ever seen. So from $1.02 to $1.52, they basically hiked up. This is really good. I've not seen any company do this. This means that the company is actually healthy. They've got plenty of cash if they actually increasing the dividends that much. Okay, so which is very, very good, and that's why probably is 3.23% right now. 5-year growth rate about just 6%. Dividend growth streak of 23 years in a row. Payout ratio just 34, and this is probably one of the reasons why they actually had to pay more, because they still have a room to improve. Up to 60% is okay. Okay, up to 6% is all right. Dividend safety of almost 70%, and this is probably one of the major reasons why they've decided to give us more money. Okay, so that's almost $11 billion in the bank. They probably thought, let's buy back some shares and give some of it as a dividend. Beta is quite low, which is nice. Current ratio is above 1, which is very good. Profit margin about 13%. 10% or more is really good. Return on equity, really a lot, 137%. And the quarterly revenue growth, okay, is about 11.5. When it comes to earnings growth, so revenue growth, I found it, but earnings growth, I couldn't find it anywhere. So I just left that one blank. Growth estimates, okay, the next 5 years, expecting about 14%. And then Simply Wall Street says actually they think is about 19% undervalued at the moment. So the price should be about 239. Right now we're looking about 190. Okay, so that's what they think. And then Morningstar have a similar thing, fairly valued at the moment, but it's $186 per share. Okay, so I put it down as a moderate buy, because it would be really nice, because I like Morningstar's valuations a lot more, because they're a lot more conservative, if you like. And what I will do, I'm definitely going to add this at some point to my portfolio. What I will do is maybe just nibble it, just add a little bit here and there. And if it keeps going down, if I can speak, okay, then you might want to buy a bit more, okay, just as we go along. So that is the valuations. It actually looks healthy. They increasing their dividend, okay, their PE is quite low. They have plenty, cash in the bank. Their return on equity is very good. Profit margins are good. Okay, they grow in their basic revenue growth, quarterly revenue growth, and on top of that, next 5 years, they expect it to grow about 14%. So to be honest with you, this looks healthy. This is really good. So the only thing you will now need to do is figure out what you want to pay for. So if you are, I'm not sure basically saying you have to buy this, but I'm saying if you wanted to add to your portfolio, what would be, your price target? And if that's the case, make sure you have a margin of safety. Okay, maybe 5%, 10% margin of safety. So if your price target is, 186, okay, then maybe just wait for that. If your price target is a 90, buy it now and then just nibble it as it keeps. If it keeps going down, I don't think it's gonna. The way the things are going right now, everyone's talking about bear markets, this and that. Okay, and remember, if the economy slows down, this is the type of business that will slow down as well, because not a lot of people will actually make these orders or whatever. Okay, and for that reason, you have to be really careful. Okay, because this is the type of business that might slow down, and if that happens, okay, the business itself, the company itself, it will be solid business, but they might have 2 or 3 years where they actually are not as profitable as they were before. But the good news is that you're still getting paid that dividend, okay, and that dividend is actually safe. And the price appreciation hopefully will kick off because it looks undervalued, okay, in the long run. So if you're looking at about 5 to 10 years horizon, then you might actually want to consider this business and start adding it to your portfolio. Like I said before, they're reporting their earnings on the 26th of this month. Okay, so if that doesn't go down well, okay, I'm 100% sure it will go down again another 4 or 5%. And if it goes down that much, then at least it might be a good thing, right? So you can add a bit more to it. So when you look at it, just the general markets the last couple of days, okay, you will see UPS actually was quite down. It was down today, it was down yesterday, a day before, just the whole week. So almost about 10% down, okay, just for this week. But generally, a lot of stocks are down. So if you own any of these companies, start looking at update. I've updated my watch list last night because I've just felt like there's a lot of companies that are in my portfolio, like right now Qualcomm, for example, that's down almost 9%. So if it comes back down to where I want it to be, the Salesforces, okay, Adobe's and so on, even Visa and MasterCard, okay, have been down quite a bit in the last couple of days. So yeah, just basically look into updating your watch list, start adding a bit more if you've got the money that is lying around. Obviously start keep a lot more stocks that you've actually really interested in. Right, so that's UPS in a nutshell. I didn't want to basically make this video any longer, so just it's about so it's most important thing is just to look at the business, look at their financials if you are interested. There's a lot more information in their latest earnings report. You can find out their forecast and what they're saying and basically the business is going to do next couple of years. To understand the business model is very simple, and the fact that they are paying some dividend, they are increasing their dividend, they are increasing their cash flows and so on. It is a very healthy business in my opinion. Okay, and then when you look at their US and international, and you can see that businesses are growing in every single way. So I'm really looking forward to adding this to my portfolio. I might start buying a little bit here and there, and if it keeps going down, I might just start buying a bit more in the next few months to come, inshallah. All right, take care everybody. Assalamu Alaikum, Ramadan Kareem again.